Eric Muathe from Muathe.com. Let's take a look at the chart for gold, and this is for December 22nd, 2016. We can see here that over the last couple of weeks, gold has essentially moved about 200 points lower from this intraday high to the current trading range. So losing about 200 points is a big deal. Let's take a look at the closing high somewhere here. Let's see what happened on the chart. We can see two lines that show that this is where it was going to struggle. If you take the RSI top line, this connects nicely with the highs here, the highs there, and also where it stalled during this high right there. Additionally, if we figure out where the movement of the highs there came, you can see that this came with this trend line break. Once the RSI broke down here, you can see the price has made a daily closing high. We've been lower since. So we draw a line from this RSI breakpoint, and again we see that it hit that same level and has reversed. So we're talking about this period here. This resistance with uniform action corresponds with the daily closing high there. Since then we've been lower. Now, one thing I wanted to point out here is this most recent drop here of about 150 points, 120 points lower, so about 120 points lower, can be explained, and I'll show you why we avoided this 120 point drop. And so let's take a look at a closer daily view. This is a 1 year daily. Let's take a look at a 3 months daily, and here we can see that ever since the RSI on the daily moved below 30.9, check the description why I refer to this number, but ever since it moved below that number, subscribers to my service have known that this was a time to avoid gold. So essentially throughout this period here, we've pretty much stayed away from trying to catch any bounce in gold, and as such we've avoided this drop. And it's very simple. If you understand what happens to instruments whenever they are trading below 30.9, this would have been a simple loss of capital to avoid. Now, you never want to say that anything is easy in the market. You don't want to be ever arrogant, but this was an easy call. We've known that as long as gold stays below 30.9, we can always avoid it, knowing that it is going to see lower prices, and that continues to be the case. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ECS. And so it is. Mwah.